What if I told you you could correctly predict the most important technology of your lifetime and still lose almost all of your money? It sounds impossible. If you're right about the future, shouldn't you become rich? History says otherwise. Back in 1999, the world became obsessed with one thing: the internet. Every newspaper talked about it. Every investor wanted a piece of it. Every startup promised to change the world. And the crazy part? They weren't wrong. The internet did change everything. It transformed how we communicate, how we shop, how we work, and eventually, how we live. But while the technology was changing the world, millions of investors were quietly making one of the biggest financial mistakes in history. Because they weren't investing in the future, they were paying almost any price to be part of it. When the excitement finally faded, the market crashed, trillions of dollars disappeared, thousands of companies vanished, and millions of people learned a painful lesson. A revolutionary technology doesn't automatically make a revolutionary investment. Now, fast forward to today. Replace the word internet with artificial intelligence. Suddenly, every company has an AI strategy. Every investor wants AI stocks. Every headline promises another breakthrough. Billions of dollars are flowing into AI. Stock prices keep climbing. And once again, people are asking the same question they asked more than 25 years ago. Is this the future? Maybe. But history asks a different question. Can a technology change the world while investors still lose billions? Because if the answer is yes, then understanding what happened in 1999 might be the most important lesson for investors today. Imagine you're an investor in 1999. Every day, the stock market reaches another record high. Financial news can't stop talking about internet companies. Friends at work are making more money from stocks than from their actual jobs. Your neighbor buys a company you've never even heard of and doubles his money in a month. It feels like everyone is getting rich, except you. Then one day, you finally give in, you open a brokerage account, you start buying internet stocks, not because you've studied the businesses, not because you've read the financial statements, but because everyone else is making money and you don't want to be left behind. That's how bubbles begin, not with fear, but with excitement. People stop asking, how much is this company worth? Instead, they ask, how high can it go? Companies with no profits, sometimes no real business at all, were suddenly worth billions of dollars. If a company added .com to its name, investors rushed to buy it. It didn't matter whether the business actually made money. The story was enough. The future was enough. For a while, it looked like everyone was right. The internet really was changing the world. More people were going online every day. New businesses were appearing everywhere. The opportunity was real. But then, reality caught up. Investors started asking a simple question. When will these companies actually make money? Many couldn't answer. Confidence disappeared. Selling turned into panic. And panic turned into one of the biggest market crashes in history. Between 2000 and 2002, the Nasdaq lost nearly 80% of its value. Thousands of internet companies disappeared forever. Trillions of dollars were wiped out. Families lost their savings. Retirement accounts were cut in half. Careers ended overnight. But here's the part that makes this story so fascinating. The internet didn't fail. It kept growing. Amazon survived. Google was born. Online shopping exploded. Streaming, smartphones, social media, everything that defines today's digital world came from that same revolution. The technology won. The hype didn't. And that's the lesson history keeps trying to teach us. A revolutionary technology can absolutely change the world. But if investors become too optimistic, even the greatest innovation can become the center of a financial bubble. So, if that's what happened to the internet, what happens when the next revolutionary technology comes along? Fast forward to today. The excitement feels familiar, but the technology is different. Artificial intelligence isn't just another app. It's already writing code, helping doctors analyze medical scans, powering self-driving cars, creating videos, answering questions, and changing how millions of people work every single day. Unlike many internet startups in 1999, today's biggest AI companies are already some of the most profitable businesses in the world. Microsoft, Google, Meta, Amazon. They aren't betting their future on AI because they have no other choice. They're investing because they believe AI will define the next generation of technology. That's why they're spending hundreds of billions of dollars building massive data centers, designing advanced AI chips, and competing to build smarter and more powerful models. So, doesn't that mean this time really is different? Maybe, but here's where history becomes interesting. People in 1999 weren't wrong about the internet. They were wrong about timing and price. The biggest mistake wasn't believing in the future, it was assuming the future justified paying any price today. That's a dangerous assumption, because every investment has a price. Imagine buying the greatest company in the world. At 10 times its real value, even if that company succeeds, you could still earn disappointing returns. That's why experienced investors don't just ask, "Is this technology amazing?" They ask, "How much am I paying for it?" Those are two completely different questions. Today, some investors believe AI will create trillions of dollars in value. Others believe expectations have become far too optimistic. The truth is, nobody knows. And that's exactly what makes moments like this so fascinating. Every generation believes this time is different. Sometimes they're right. The technology changes the world, but history also reminds us that excitement has a way of pushing prices far beyond reality. That's when investing quietly turns into speculation, not because the technology is fake, but because expectations become impossible to satisfy. Which brings us to the most important question of all. Maybe artificial intelligence becomes the most important technology of the next 50 years. Maybe it transforms healthcare, education, business, science. Maybe our grandchildren will wonder how people ever lived without it. That's entirely possible. But history teaches us something equally important. Revolutionary technologies and successful investments are not always the same thing. The internet changed the world. Many internet investors still lost everything. The housing market created enormous wealth. It also created one of the biggest financial crises in history. Innovation creates opportunity. Human psychology creates bubbles. When excitement turns into greed, when optimism becomes certainty, and when people stop asking, what is this actually worth? History starts repeating itself. So, is AI a bubble? The honest answer is, we don't know. Not yet. But maybe that's the wrong question. A better question is this: are investors making decisions based on careful analysis, or simply because they don't want to miss out? Because whether we're talking about railroads, the internet, cryptocurrency, or artificial intelligence, the greatest investment mistakes have rarely come from believing in the future. They've come from believing the future has no limits. And that's a lesson worth remembering.